All right, DeLynn, it's a new week, and we got to do a new show. What do you want to do it on this week?
Should we do questions and answers? Again. So we've done questions and answers, the most popular questions for conventional loans, FHA loans, and this week we're doing our veterans.
Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us. If you guys only knew what goes on during the breaks.
You know what? After that great teaser, I'm just like, I'm on the edge of my seat. Like, wow, this is going to be a great show. I can't wait to see it. So, DeLynn, go ahead and take it from here.
No, you are just too much. It is going to be a good show.
I know.
We get lots of phone calls from realtors and veterans about wanting to know more about the VA loans. And so the infinite wisdom of all of our underwriting team, our VA underwriters and such, got together and they put together a list of the most commonly asked questions on a VA loan. And there's more actually here than we can go over, but we're going to kind of like highlight some of
There's way too much to cover because last week, if you remember, we did conventional loans. The week before, we did our favorite FHA loans. So now we're going to cover VA loans because there's definitely significant difference in the rules, guidelines, regulations of all those loan programs. And you know what? If you don't like the rules,
wait a minute.
Just wait a minute, because you got to watch our show every week to keep up with these rules.
I know.
And sometimes
we have to watch our show every week to keep
just so
up
I remember.
with these rules.
Well, at least we're guaranteed 2 viewers this week. There's you and me in the Walking Dead cup.
My Walking Dead cup?
Look,
I love my Walking Dead cup. Nothing. I just am putting my angel wings out there because I love it.
All right. So we don't run out of time this week. Do we want to get right into questions, or you want to talk about hockey season that's already upon us?
Yay! I know. I'm so excited that hockey season is upon us.
Yeah.
I know. That's exciting.
Let's go Lightning.
Let's go.
Okay.
Let's go Lightning.
All right. So
hey, we have a bus trip, but we'll talk about that at the end of the show.
Yeah, we will. We will.
There's a teaser for you.
There's a teaser.
Stay till the end. We're going to talk about a Lightning bus trip.
So the biggest
VA questions.
and we answered these on conventional and FHA. So the waiting period.
Right.
What is
After
the
a
waiting
bankruptcy,
period?
foreclosure, short sale.
So what is the waiting period? What do you think it is?
Is it 10 years? No.
So
3 years.
3 years. Let's go with 3 years.
3 years.
Yeah. And I think
there's things for compensating factors where it could be less.
I think it can be as low as 24 months.
Yes.
But you might want to start looking if you've had a bankruptcy, foreclosure, deed in lieu. After 24 months, you might be in the market for consideration. I think it'll be based on findings, but 3 years is a good rule of thumb.
And by the way, just because I don't know how some of these rumors get started, maybe they Google it. I don't know.
Because if you Google it, it's going to be true.
It's actually really funny. I had a customer who said to me, on bankruptcies, they go by the date you filed the bankruptcy and not the date that the bankruptcy was discharged. Wrong.
Really?
Yeah. I had a customer tell me he read that online. So, no, they don't. They go by the discharge date. Always on bankruptcies, it's by the discharge date.
So let's go with if you had...
On a Chapter 7.
It's 2019. If you got out of the trouble in 2016, now it's time you can be back.
Right. So you can do that again.
All right.
All right. The other question we get a lot is, what is the minimum credit score? Again, just like all of the other loans, a 620 is the preferred minimum. However, just like with FHA, VA does allow us to go down to a 580 with compensating factors. So they're not going to get a 580 and all the bells and whistles and perks that come along with all VA loans. They're going to have to put a little more skin in the game most of the time.
Yeah, they might have to put, because most VA
A down
loans
payment.
are 100% financing. That's why people like them. And there's really no monthly MI
That's
or
right.
PMI.
I
And
know, which is really, that's why VA is one of my favorite loans.
Yeah, you pay
no
like-
down payment and no PMI.
And it's almost like the funding fee is kind of like that single premium
Right.
PMI
Right.
that you're putting in, so you don't have that additional payment every month.
And the funding fee, that's the only thing with a VA loan when there's no, well, actually on all VA loans, depending upon what branch and reserves or full Army or Navy or whatever it might be, it is the funding fee. And if you've ever used it before, if you've used your VA benefits before, the funding fee is different than if you're using it for the first time. But the really cool thing about that funding fee can actually be paid for by the seller. How cool is that? Because that could be a big chunk of money in some cases.
Yes, which rolls us into our next question.
I know, that's why I said that.
What a great segue, DeLynn.
I know, thank you. Thank
So
you.
what is the maximum seller concessions credit on a VA loan?
So here's the funny thing.
This is-
Everyone gets this one wrong.
Yeah.
Even lenders
Yep.
get this one wrong, because I have had realtors call me and say, well, the lender that I usually use said that it's capped at 4%.
Wait a minute, go back. What do you mean? The lender I usually use. So they're
Yes.
only calling you because they didn't get the answer they wanted from their current lender?
I'm not sure, but
I didn't like how that even started. That was
So the thing is that some lenders out there are giving realtors and veterans wrong information.
no.
Yes, they're saying that the maximum that the seller can pay of the closing cost is 4%, and that is completely incorrect.
So on a $100,000 loan, they're saying $4,000 would be the maximum
Which is completely wrong.
contribution. Okay.
Which is
so
completely wrong.
So what is the correct answer, since we're all about giving good information and unlike some Google things?
So this one's a little bit. So the 4% does come into play, but it only comes into play for your escrows, or the funding fee, or if they're buying down the interest rate with points. Those are the only things that are capped at the 4%. All of the normal closing costs associated with doing a loan, which would be your origination fee, which would be your title company fees, your title search, your
Doc stamps.
doc stamps,
Intangible tax,
any of that
appraisal
stuff,
fees.
recording, all that stuff. That there is no cap on that. The seller can pay every penny of it.
So there really can be no cap per se on those
The
contributions.
true
closing
costs.
Gotcha. That's pretty good. So it's
I
essentially with a
know.
VA loan, they could come to the table with little to no money. Is that
Absolutely.
Is that what I'm hearing here?
Absolutely.
That's pretty amazing.
I know. Everybody
I mean,
gets that one
obviously,
wrong, though.
They probably need to pay for their appraisal up front, out of
Yes.
pocket, and maybe home inspections to have an inspection.
Right.
So Nick, quick question.
Yeah.
Does VA require a home inspection?
No, VA does not require a home
See?
inspection. The
People
only
think that.
inspection, so that you know, VA absolutely does require is termite, or what they call WDO, wood destroying organism. Besides termites, what else
Did you
destroys
Google
wood?
that on your way here? WDO.
You can find everything on Google, right? We were just talking about that.
How valid that information is.
He was looking something up, and I said, oh, okay, let's not go by what the VA underwriter who has her certification for the last 20 years has to say. Let's check Google instead.
All right, let's talk about tax liens and judgments, but first, let's go to a quick break.
Okay.
We'll be back right after this.
And finance expert that goes to bat for you every day as a consumer advocate. Your host and the consumer quarterback, Brandon Rhymes.
right, we're back talking about one of our very favorite loan programs and the requirements and the
VA.
guidelines and all the questions you may have.
And it really is my favorite loan program.
Yeah, it's a good one.
We do a lot of them. They're very good.
what?
They're great for the veteran.
And it is. And thank you for the veterans who serve. They deserve
Absolutely.
this benefit. I mean,
But one thing, like we were just talking about the closing costs, that a lot of veterans definitely are misguided on is there's no down payment. So then when they say you can get into a home and it doesn't cost you anything, there's no down payment, but there's definitely closing costs, as we were just talking about, associated with it. A lot of veterans think that they don't have to pay anything, and that, of course, is incorrect.
But you can have the seller pay those closing costs, as we just discussed. So,
right.
And it's important that people understand the difference. And there are ways to give
Right.
borrower credit in the rate to help compensate.
And
for
we've done
closing
that with
costs.
veterans
Yeah.
before.
So what about, and I know we're going to talk about tax liens and judgments,
Mm-hmm.
but what about the non-allowables? Does that play in? I mean, obviously there's certain things a veteran cannot pay.
Absolutely.
Okay, and if that, and if the seller doesn't pay any closing costs and it's a small loan, that could be a challenge
Right.
on the lending side.
Right.
So I always say, if nothing else, if you're writing a contract, put in the seller to pay VA non-allowables. And
At the very least.
Yeah,
Because
so-
that protects your veteran. That protects your buyer.
yeah, and if it's a really small loan amount, sometimes you can tuck it in because we have the origination it can be part of.
Right.
But if it's a small loan, it may not fit, and those
Yeah.
non-allowables can exceed it. And guess what? That means it either has to be paid by the lender, which
Right.
isn't going to necessarily make your lender happy, or the real estate agent
And
if the seller doesn't agree to pay it.
And speaking about the non-allowables, one of the other thing that I wanted to bring up, because this is another thing that just recently changed, like we said in the beginning, you know what, if you don't like what, the guidelines are, wait a minute, because something that has been in place for many, many years, but has just changed recently, was who can pay for the termite test, the WDO, the wood destroying organism test. It used to be the veteran was not allowed to pay for it, and we actually had to get proof. We had to get a copy of the seller's canceled check proving that the seller paid it. No more. In the state of Florida, and this is something that changes state to state, which is another thing that boggles my mind. Why don't they just do this nationally, whatever they're going to do? But
'Cause
in
they
the state
can.
of Florida, the veteran can now pay for the WDO.
Oh, see?
Seller doesn't
And
have
you
to
know
pay.
what?
It's no longer a
If it's-
non-allowable.
You know what? You bring that up because if I'm a seller, I would be kind of leery. Like, wait a minute, I got to pay this pest inspection for my buyer to get his loan.
I know. Isn't it weird?
Yeah.
It's
So I'm glad that went away.
yeah, it's very
That can be
strange.
challenging.
But
All right,
anyway.
so let's talk about tax liens and judgments.
Tax liens, judgments, collections, and charge-offs. So
And
if
now
you have
this is
somebody who had some
specific
issues.
again only to VA.
Only to VA. Yeah, these
Yep.
are all just VA.
So are they going to have to be paid, and when are they have to be paid?
Yes. Your tax liens and your judgments, absolutely, because they can attach to the property immediately. They're going to have to be paid. No ifs, ands, or buts about it. Like on conventional, we had some wiggle room with that. Not on VA. Collections.
Sorry,
Collections and charge-offs, they might be a little more
it was getting
lenient.
too serious for me.
So you decided to
I needed
to
to
wiggle.
wiggle.
You did your shimmy.
I did.
Yeah. Remember when you did Dancing with the Stars?
I paid a lot of
He likes
money to learn
forget
how to
about
shimmy badly.
Yes. Yes, you did.
And I still
On
can't
both
shimmy.
accounts.
I
You
still
paid a lot of
can't.
money and you shimmied badly.
All right, leave me alone.
Yeah, talk about, go
That's
to
coming up
YouTube
again.
and look at Barry's Dancing with the Stars.
It wasn't that bad, was it?
Oh, it was bad. But anyway, all right. So collections and charge-offs. People are like, okay, I'm turning these two off.
So
Collections and charge-offs. Those, sometimes there might be a little bit of flexibility on that. It depends on the strength of the rest of the application, which means when we put it into the system, when we run the findings through Fannie Mae and Freddie Mac,
Meaning if they're going to have to be paid off or not.
It will
so
tell
it's going to
us.
be based on the findings. So whatever the finding is, whenever we put it
That's
in, we'll
what it will
determine
be.
if the charge-off or
Yep.
collections need to be paid. Okay, good. Good.
The other thing that I thought was pretty interesting was the student loan one.
Yeah,
Is that
the
one you were gonna-
calculations are totally
Yeah.
different than
So,
like FHA and
I was going to say, I
conventional.
think
Totally different.
you may or may not remember in the last
And
couple of
realtors
weeks.
may not care about this.
Right.
But borrowers will.
Borrowers sure do. So it used to be in the old days, if the payment was deferred for at least 12 months, we didn't have to count it. Well, then about what, a year and a half, 2 years ago, the
Right.
entire world changed on that, and we had to, regardless of whether it's deferred or not, we had to start adding payments. Guess what? Not on VA.
So
So
you can
VA still has
actually-
the rule that if it's deferred more than 12 months, we don't have to count a payment.
Right. So that's a big deal.
Big deal. That makes a big, big
And then
difference
if
for
it's
some people.
not deferred, the formula to calculate it is totally different than conventional and
And
FHA.
much more reasonable.
So, somebody who's just out of,
Right.
out of military, maybe has a high student loan debt, it might make sense and they might qualify under the VA rules where they wouldn't qualify
Right.
under conventional or FHA. So good to know. There's
Yeah.
options.
Yep,
Good
there are
there.
options.
So what about, this comes up a lot too, on a private well,
Yes,
the realtors
this
all
does
seem to
come up
get,
a lot.
the realtors all seem to get nervous because, all right, they're selling a property.
Well and septic.
Got well and septic. What happens with VA? Is VA going to make you rip it out of the ground and hook up to city
Yeah.
water that's not necessarily available?
And mind you, this doesn't make a difference if it's a manufactured home or a regular house. Doesn't make a difference because sometimes we get that
Yes, we
too.
have
Oh,
a-
that's only on manufactured homes. No, this is on any house that has a well and a septic.
And there are a lot of them out there.
So do they need inspections and such? Septic, no. It runs just like conventional and FHA. It only requires an inspection if the appraiser notates something is a little amiss.
Right.
But for the most part, no. We recommend them, obviously, as I'm sure you realtors recommend to your buyers as well. But on water testing, always, 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 VA does require a water test. If it is on a well, we have to have at least bacteria, lead, nitrates, and nitrates.
I don't know the difference.
I don't know the difference
but
either,
I'm sure
but
if
that's
you
what
go
it
for a
says.
water test, and
They'll know.
the realtor, is the realtor allowed to go for this test or not on VA?
Yeah, so this is the other thing that's pretty interesting. In theory, no one who is going to benefit from the transaction is allowed to do the water test. So you're going to have to either have the county come out and do it or hire a private water company or something, and they have to do the collection
So
of it.
you as
so
a
the
realtor
realtors, the seller,
cannot-
and the buyer
cannot go
or
over
us, the
and
mortgage
get-
people, cannot do it.
and they cannot go over and get their own water test. Interesting.
Isn't that interesting?
Yeah.
I thought
be
so
careful.
too.
But you can send your kid.
And the water test is good for 90 days. So for what it's worth, if for whatever reason it gets
All right.
delayed or
So since we're still talking about well and septic, setback requirements, that comes up all the time on FHA.
it does.
But
How
the-
far away is the well from the septic? How far away is the septic from the property lines? In VA, who cares?
Yeah, so it doesn't matter.
They don't. Nobody cares.
And you would think they would be the ones that would be
I
all worried
know.
about that, but they
Yeah.
don't care at all.
They don't care at all. I wouldn't want to buy something if the well was on top of the septic,
No,
but
it's crazy.
anyway,
All right,
they
listen,
don't care.
we got to take another short break. We got a few more great questions and answers and upcoming events right after this.
Dude, I got this cool.
Consumer advocate, your host, and the consumer quarterback, Brandon Rhymes.
All right, we're back with some great questions and answers about VA loans. DeLynn's
Yes.
favorite loan.
I know, it is.
I think you like all loans, though.
I do. I know, it's really, I'm like weird.
You are. You
I'm
are.
like
You're like
sick.
You're like. Oh,
I get all
this is-
excited
you
about
come
it.
in my office all the time. You're like, did you know this? And you're like, you're all excited. I'm like, yeah, so. Yeah.
Like an accountant at an IRS convention. They get all
Oh.
excited. I know. I get all excited about mortgages. I know, it's
I know.
weird.
But I get excited about watching the craziness of the market and the bond rate and all
I know.
that. You know, we had another Fed cut today.
Which is nice.
Yeah, which is nice, but again,
But what does that
short-term
mean to interest
nothing,
rates? Nothing. Not a thing.
Short-term interest rates have little,
Nothing to do with mortgage
and
rates.
it can over time.
I know.
But right now, no. No, actually, rates went up a little bit today, the same day they cut rates. So,
Isn't that funny?
You know, and I know they're trying to stimulate the economy because 53% of CFOs of major corporations thinks that we're going to have a recession within the next 2 years.
So once again, so the market is going to overreact
Yep.
to
Fear.
what they call fact
Yeah.
based on theory.
Yeah.
So they're theorizing
Yep.
that we're going to have a recession, and the market is going to react to that as if it's fact. That
Yeah.
drives me
I know,
nuts.
I know. And you know
Fact
what?
based on theory.
My philosophy on the real estate market is, if you're buying a house to live in it, it's way better than, if you're going to hold on to it for a few
Yeah.
years, it's going to be better than renting, even if the market does come down. Is it going to ever crash like it did in 2009? I don't think it can,
Right.
because it's a whole different environment to,
Right.
what we did then. I mean, with the appraisal guidelines,
That
the
was a
income
bubble waiting to burst.
requirements. Yeah, I mean, everybody says, oh, it's gone up. Yeah, but it's gone up like this.
Steadily.
It didn't go
Right.
up like overnight where
Right.
we had $50,000
And there wasn't-
houses. They were flipping for 150.
And
then
all
it-
fraudulently.
Yes.
Fraudulent.
The amount
Contracts,
of fraud
fraudulent
and
flips.
foreclosures right now is
Yeah.
minimal. There's very little going on.
Right.
It's not
No,
happening.
it's-
We don't have 6 people or somebody working at Walmart buying 6 investment properties.
Right. Or, a $500,000 house.
Yeah, it's so different.
When they're
So-
making minimum wage
Yeah,
because
but it's just
stated
different.
income.
So anyway, we just
Anyway.
got off on a tangent. All right, let's talk about.
We digress.
Speaking of flips,
Okay,
Somebody
VA,
just
back to our
said
VA
flips.
questions. Flips,
So
yes.
what's the flip
So
policy?
what's the flip policy? There isn't any.
so
So
you could-
FHA is pretty strict with you have to wait at least 90 days.
then
And
180.
a second appraisal up to 180 days.
VA, no
VA,
requirements.
none.
Yeah, so
None,
it's so
just like
funny how-
conventional.
how-
So that's nice.
Yeah, it is nice because there are a lot of flips out there. There's a lot of investors buying up properties, fixing them up, reselling them.
So on a
If they do a
VA,
VA loan,
VA buyer, you're in good shape. I
Yep.
know people get afraid of that. Don't. It's the best loan out there. The other thing that they're allowed to do, and actually the funny thing is the seller can also help with this. The question came in is, can they pay off like credit card debt in order to qualify for the house? The answer is yes, they can do that. That's allowable. And it's even allowed that the seller can pay that debt off for them if they want.
that's part
How
of that.
about that?
That's part of that 4% though. thing,
That's
right?
part, yeah, but you know
Okay.
what? But it's allowed. It's not
Yep.
allowed on any other program. That's one of
That's
the things I
interesting.
love about
So
VA
they
is
could
they have so
help-
many good perks.
You can help people qualify for more
Yes.
loan this way.
Yes.
So that's the bottom line.
Right.
Okay. All right.
VA, can they close in the name of a trust? No, sorry.
Nope.
Absolutely has to be the veteran.
Yes. Yes. Very important. So
Yeah.
whenever you're writing up a contract to our real estate partners out there, make sure it's not,
Yeah.
the buyer's it's not in the name of a trust. So
Right,
good
has
to
to
know
be
that.
the veteran.
All right. Who's an acceptable co-borrower?
Co-borrower, we do get this quite a bit too. Can fiance be a co-borrower? No.
No.
Can mom or dad be a co-borrower?
Nope.
No.
Nope.
Brother,
Only-
sister, grandma, grandpa?
Nope. No.
No co-borrowers allowed unless
It's the spouse.
spouse,
Yep,
period,
that's
done.
it.
And I have had people go and get married. So, yeah, even if they're engaged, doesn't make a difference. Copy of the, marriage certificate or the wedding announcement. Nope.
You
They've
know
got
what?
to be legally married.
And then people ask me, why would you want to co-borrow? Well, simply for income purposes to qualify
Right.
for more loan.
Right.
Bottom line. Okay.
And sometimes what happens lately is moms and dads are moving in with the, because it's.
We're seeing a lot of
We're
that.
seeing a lot of that. Moms
Yep.
and dads are moving in with their children and stuff and saying, well, we're all going to be on the loan together. Not if it's a VA loan, unless everybody is a veteran. So
Right.
the only time that they do allow somebody other than the spouse is if that other person is a veteran as well. then they're allowed to co-sign.
Good to know.
Yeah.
Good information. Good information. All right. Any other things we want to cover? Because we got to wrap up here.
I know. Manufactured home engineering report. I know that on conventional loans, you may or may not know, there usually is required an engineering report if anything has been added after the mobile home has been put there, like a deck or something like that, which 99% of them have out there. So
Yes.
Conventional loans require an engineering report to make sure it was done to HUD standards. VA does not.
That's
How
nice.
about that? That
Another-
is very nice. It
So
saves
there's
a little bit of
some-
money there, too.
Some leniency there on VA.
Yes.
Okay. Anything else on VA?
The last one that I thought was really interesting was, are there heating and cooling property requirements on a VA loan?
So really, you only need heat.
Heat.
That's the only
That's
requirement.
it. So even though we're in Florida, air
Yeah.
conditioning
I think
is not a
most
requirement.
of the homes down here do have.
You're dumb if you buy it without
Yeah.
air
I mean,
conditioning,
though?
but
When I first moved back here in the 70s, a lot of the houses didn't have it, and it was a
Really?
big deal. Yeah,
Are you
would go
kidding?
They would go to Kmart and buy a window unit. A lot of the
no.
older houses didn't have it. Now they have the add-on.
You're
You see
dating
more-
yourself.
I'm sorry.
You're
I'm
ancient, man.
I am. Now you see those ductless systems out there.
I know.
You know, I mean,
know.
and they work great.
Yeah.
Those things are cool.
You definitely want to do that.
All right,
I think
so
that's it, right?
yeah, let's talk about upcoming events real quick because we have a big one coming up for our realtor partners, and it's probably the most important one, the most attended one of the year.
Our Lunch and Learn. October 8th is our next Lunch and Learn, and it is going to be the recertification for Pasco County down payment assistance.
And
As all of you know, Pasco County does require any realtors and lenders who are, their client is going through them for down payment assistance, the lender and the realtors all have to be certified, and the certification is required every year.
So
You
even
have
if
to
you've done it
recertify.
before and you did it with us, you better do it again because it's been a year since we did
Because
it.
guess what? You expired.
Yep, you're about to expire. And you know what? Even if you don't do that loan program, it gets your name on the county list that says
Right.
that you can do it. And every,
Buyers
disclosure's
look
everything.
at that list and they're
And
going to
they
make
go,
sure
"Oh,
that,
yeah."
oh, okay, my realtor's on here. Let me pick a realtor from this list. And even though Pasco County doesn't have funds available for down payment assistance right at this moment, doesn't mean, you guys all know this, they'll get them.
Yeah,
They will
and you
get
just
funds.
don't know when and how long
Right.
they're going to last. But yeah, you definitely want
But
to
you
get
want to be certified.
All right, and upcoming.
And it's free and it includes lunch. How
yeah,
about that?
So it's at Carrabba's, October 8th. Message us. It will be packed.
Packed. So
you better
sign up
RSVP.
soon.
All right, other upcoming events for WPBA. November 10th, we have a tailgate for the Bucks game. Go on WPBA.biz to see that. And then, of course, save the date. The Grinch is coming December 13th. So that's all we got. Thanks, everybody.
We appreciate
Share the
everybody
show.
watching.